Buenas tardes nuevamente con todos. Estamos ya entrando en la penúltima sesión del día y hoy en este momento nos va a acompañar Brian Dees de BlackRock. BlackRock es el gestor de inversiones más grande del mundo y ha tenido a través de su CEO Larry Fink un impacto muy relevante en esta nueva visión del empresariado, el stakeholder capitalism. Y es un importante propulsor de la inversión responsable. Brian es director global de inversión sostenible de BlackRock y profesor del Kennedy School of Government en Harvard University. Y además, Brian fue un asesor importante del presidente Barack Obama en materia de cambio climático y política energética. Esta exposición, esta conversación va a ser exclusivamente en inglés. Dentro de la plataforma tenemos, como ya saben, la opción para traducir al español y para ello deberán elegir la ventana dentro del espacio que tienen ustedes en vivo. Brian, thank you again for being with us this afternoon, and very happy to have an interesting conversation with you. Welcome.
Thank you very much, Aldo. I'm very happy to be here.
So just to start, let me make you a simple, easy question. Not easy, but straightforward. Why should sustainability matter to investors and to corporations? Why is it important?
It's a great question, and it is an important place to start. And I would start actually by defining sustainability and sustainable investing in the first place. This is an area that has suffered historically from confusion in motivations, confusion in terminology. So we start at BlackRock with a very simple definition. Sustainable investing is about combining the best of a traditional investing approach with insights about the environment, about the natural environment, and about how stakeholders are affecting companies in traditionally non-financial ways. We believe those sustainability-related factors, whether connected to the environment and climate change, or whether connected to how a company is managing its employees and the communities it operates in, are becoming increasingly central to whether a company can generate long-term financial performance. So the reason to care is this is no longer an issue about a person's values. This is about financial value. And the work that we have done over the course of the last several years led us earlier this year to say that we are going to put sustainability at the center of how we invest, precisely because we believe as a fiduciary, in order to achieve the long-term financial goals that our clients depend on, we have to integrate sustainability into how we think about risk, how we think about return, and how we think about building portfolios.
Great. And following on that, what's BlackRock's strategy around sustainability? And where do you think, what's your aim to get in the next 10 years, for example? Where do BlackRock see sustainability in 10 years?
Yeah. Well, we start from a hypothesis about how sustainability will affect investing, and that really rests on two views. The first is that these factors that I was just mentioning, whether it's the risks that climate change poses, both the physical risks that we see in increased frequency and severity of weather events, but also the transition risks associated with the global move toward a lower carbon economy, or whether it's the risks about whether a company is effectively managing its relationship with its key stakeholders. We believe those risks are taking on increased financial salience. That's hypothesis one. The second hypothesis is in some ways more profound, that we believe that we are on the front end of a tectonic shift in the way that savers and asset owners around the world are going to preference more sustainable companies and more sustainable assets across time. And as that happens, it will affect not just the individual performance of companies, but will affect how the entire financial market operates. In fact, our CEO referred to this as a fundamental reshaping of finance. So based on those convictions, our approach has been to try to think about what it means to embed sustainability across everything that we do. And I would summarize that in three categories. The first is building sustainability into how we integrate risk in our active investment platforms. So we have undertaken this year an effort to integrate sustainability-related risks into how we invest across all of our portfolios, to think about sustainability risks in the same way that we would think about any other core financial risks. So that means, for example, stress testing every portfolio at BlackRock for forward carbon price scenarios. So we understand, are there risks that we're holding in a portfolio that we might not otherwise understand if we're not asking the question the right way. The second area is access. We made a goal of having $1 trillion in dedicated sustainable strategies by a decade from now. And we have committed to build out in very significant scale the number of sustainable investing products, the number of sustainable investing strategies, to make it as easy as possible for clients who want to shift into sustainability to do so. And in particular, we found that building block solutions to allow people to build entire portfolios with a sustainability lens is increasingly important to democratizing access, making it easier for more people to get into this effort. So that's core to our strategy. And then the third area is in how we engage with the companies where we as BlackRock own an equity stake on behalf of our clients. And consistent with our view that these issues are increasingly important financially, that is leading us to increase the priority on those issues when we're sitting across the table with management teams as an owner of equity, encouraging better practice around the diversity of workforce and boards, around taking seriously the risks to climate change to particular business models. So in all three of these areas, we start with the core investment conviction and are thinking about how we can build this into our role as an asset manager.
And sustainability, in a way, as introduced, in my opinion, a big change, a change towards long term. Our markets and the way we have been investing in the last decades were very focused on quarterly reports. And now sustainability make us see long term as a very important factor of investing. And today we have COVID-19, a crisis globally, and we have a very short-term effect on companies, on economies, on people. How do you think this COVID-19 crisis, global crisis, will change sustainable movement, the sustainable movement in the future? And then if you see now trying to bring this more to Latin America, an opportunity in Latin America once COVID-19 is over.
So I think that COVID-19 is accelerating significantly the trends around sustainability that were present in the market, but have really been exposed in this crisis and in this year. You see that in a couple of ways. One is investor appetite to shift into sustainable strategies has never been higher, even during the height of the crisis. The first quarter of this year, during a period where we saw the incredible market downturn and volatility in March and early April associated with the COVID-19 crisis, we saw the largest inflows ever into sustainable strategies during that period, reinforcing the sense that as people are looking for resilience in times of uncertainty, sustainability is an increasingly important element to that. And second, we've seen at a company operating level, COVID-19 has laid bare the idea that if all you are focused on is a short-term shareholder return, that somehow you can deliver on the expectations for your business. We've seen a period where basic efforts to provide employee health and safety and wellness, the ability to support the communities that you operate in, have never been more important. And companies that don't have a viable strategy to address those issues are going to be particularly hard hit during a period like this. And lastly, we've seen this incredible human toll, the physical impact of a global pandemic that knows no borders, I think is reinforced among consumers and among workers, a sense that there is an interconnectedness, and that we need to have, that companies need to play a broader role in helping solve global challenges. So in all those ways, I think COVID-19 is accelerating those underlying trends where companies are going to have to increasingly be able to answer not only what is your role in helping bring local economies and workers through this crisis, but also over the long term, how are you prioritizing things like addressing your employees and your customers' needs. Now, to your question on Latin America, I think that obviously the emergency and human toll of the COVID crisis right now is a priority for country governments. It's a priority for a number of employers. It is and exacting a very significant toll across the region. But I think as we come out of this crisis, I think the opportunity for Latin America is among the largest anywhere in the world, in part because there has been significantly less adoption and uptake of sustainable investing in Latin America prior to the crisis. And so you start from a position where there's more upside opportunity, that as sustainable investing strategies have increased in quality, they've increased in number. Now coming into the space, even as new to this, there's significantly greater quality and greater number of investment options where you can actually start to integrate sustainability. So that creates an opportunity for the Latin American investor and the Latin American market. And second is that as you think about the need for diversification, and this crisis, should, if anything, reinforces the need to have balanced, resilient, and diversified portfolios. The ability to access sustainable investing strategies as part of a diversification opportunity, the ability to build a whole portfolio with sustainable building blocks has never been greater. And that also, I think, reflects real opportunity for Latin America. But I guess I'd also turn that question back to you, Aldo, and say, as you think about this issue, and so I'm curious, what do you think sustainability means to Peruvians? And when you think about opportunity, obviously this conference itself is in some ways an indication of the opportunity, but how do you see the opportunity from where you sit in both the Peruvian market and in Latin America more broadly?
Okay, this was supposed to be an interview to you, not to me, but I'll tackle the question. Well, as you mentioned, actually, this event reflects that for Peruvians, sustainability is really important, and we've been having this event for several years now. I think first, from a country perspective, we've seen in the last couple of years, we are a country rich on natural resources. We are a mining country. You have a strong fishing industry, agriculture, and we also have a country with a big inequality. And when you put both together, we've seen several issues on developing projects, on putting investment to work in order to generate wellness to the society. So I think in the last couple of years we have come to realize that it is very important to evaluate and analyze every stakeholder we have. On the investment perspective, now talking from as a pension fund manager, we truly believe that companies that really look in the future, that really have a long-term view, are much more capable to generate long-term value. And we've seen it here very clearly. Mining companies that had great projects, that invested a lot on the project, but probably didn't invest as much as they could have done on social impact. And at the end, the project has not come. And that has generated a huge political problem that is making very difficult for us to put projects to work. So I think there's, as you mentioned, there's a great opportunity to put projects to work with a long-term view, incorporating other than financial variables into place. And we have a lot to do here. So I think it's there's a good opportunity, a great opportunity, and more people is taking that into consideration every day now. So that's important. Let me change to the subject a little bit.
Good.
And you were a key advisor to the White House during the Paris Climate Accord in 2015, which is a point break changing event in the climate agreement. And now we are coming into in the US, and given your experience, into a new election, and we have an election coming in a week from now, less than a week from now. And how do you see the outcome of a hypothetical outcome of the election affecting the sustainable movement in the US and in the world?
Well, we're having this conversation, as you say, at a very opportune time, because we'll have a consequential election in the United States. I'd answer that, though, by starting with the global perspective. In some ways, the COVID crisis has made more challenging the question of global policy coordination on the issue of climate change. But I think that actually what we will see coming out of this crisis is as with many things, an acceleration of those efforts once we get through the biggest crisis moments. In just the past month, we've seen the European Union set much more ambitious climate targets for the next decade. We saw China announce last month its intention to reach net zero emissions before 2060, a new and path-breaking concept for the Chinese to make that commitment and commit to reflect that in their next 5-year plan. And we're seeing in jurisdictions like in Europe that the recovery efforts around COVID, the fiscal policy investments, and also on the monetary policy side through the ECB and the IMF, an explicit focus on a green recovery. So all of those factors lead toward a global focus on trying to make this recovery from the COVID crisis more green and also less resource efficient across the resource intensive across the board. Now that's the context for this for the election in the U.S. Obviously, these issues are very saliently on the ballot, so to speak, in the U.S. election. We've got the challenger candidate who has committed to rejoining the Paris Agreement, to making a number of domestic investments and domestic regulatory steps to put the United States back in a leadership position. And the incumbent administration, which would largely reflect a status quo approach and a lack of interest in international engagement on this issue. So I think if we, depending on the election outcome, I think what you will see, the biggest question mark is whether the United States will re-engage as a leader in that global effort. But I think that regardless of the outcome, you're going to see the major emitting economies, particularly in Europe and in China, and I think in North America as well, outside the United States, trying to accelerate climate action. So I think the biggest real question is whether the United States is playing as a leader in that and trying to build its own domestic clean energy industry to compete and win for export markets around the world, or whether the United States is disengaged and the rest of the global community is sort of reshaping that international effort without the United States involved.
Great. And I think we have time for one additional question, and I want to make a new change of subject. We will have tomorrow in the afternoon an interview with Michael Porter, and among other things, we will talk with him about shared value and purpose. As I mentioned before, BlackRock and Larry Fink, BlackRock CEO, has been a loud proponent of stakeholder economics and how the long-term view is important, and how the firm purpose is the motivating force behind the generation of profits on the long term, and purpose and profitability are tied together. Can you elaborate on that? How do does BlackRock pushes or lives that purpose view inside the company, and how do you translate that view on the investments you do?
Well, look, I would say if this global pandemic and the coronavirus teaches us anything, it should teach us that the idea that you can run a company and generate long-term profitability without a focus on purpose and without a focus on all of your stakeholders, we should leave that behind as one of the legacies of this crisis. Because as we spoke about, I think this is laid bare in so many ways that companies that cannot renew their purpose with their stakeholders, particularly their employees and the communities that they operate in, simply won't have the license to operate going forward, and they certainly won't be the leaders over the long term. From a BlackRock company perspective, I think the focus for 30 years has been on a single animated purpose around being a fiduciary to our clients for the long term and trying to invest on their behalf by thinking forward beyond the short-term immediate results and trying to understand as best we can what those longer-term drivers of value are. It's that purpose that has led us to put so much energy around sustainability, based on our view that over the next 5, 10, 15 years, this will increasingly become a driver of value. And it's what leads us to do what we can in engaging with companies and in communicating more broadly to reinforce that from our perspective, the way to generate that long-term financial value in the investing practice is to focus on those issues, focus on those companies that are really communicating that purpose across time. And the last thing I would say is that does not mean that companies that are operating in traditional resource intensive areas or otherwise are not capable of communicating or committing to purpose. What it means is that in every industry, in every sector, in every way that you operate, companies that are asking themselves that connects with my employees, connects with my communities, having an explicit strategy and focus on these issues. That's what we look to in trying to understand those companies that we believe are actually getting it right over the long term.
Yeah, and I completely agree with what you have said at the end. It's not about investing in one industry or not. It's trying to choose those companies in several industries that are doing the best and are really looking forward. And this is not a change from day to night. It's a process. We cannot change as ecosystem, as companies, in a very dramatic way. We need to have this journey and have the steps of this journey well defined. I really admire what BlackRock has done in markets and the education and the way BlackRock has pushed purpose and responsible investments. And I think this is something that our companies in Peru, the leaders of the market, can do and should replicate. Brian, thank you very much for your time. It's been a very nice conversation for me, and really appreciate BlackRock giving time to Peru in this very important meeting we are having this week.
Well, Aldo, thank you for your leadership and for your partnership, and to all of the participants, thank you for your time and stay well.
Thank you. Bueno, pasamos a la última presentación del día, y a continuación, para cerrar este evento, este Día de Prosperidad, presentamos en el bloque siguiente a Gonzalo Villarán y la Visión Lima 2035.